Hello guys, welcome back to the channel. I hope you guys are all doing well. I'm super excited to be coming your way today because in today's video I'm going to be breaking down my trades I've taken from my trades journal. I also want to apologize because I haven't uploaded a video in 2 weeks. I got caught up in a lot of things, but I'm back and I'm going to be bringing amazing content your way. So you want to make sure you're subscribed to the channel. Also turn on your post notifications to know when I post videos like this for you guys, and share the link of this channel with your friends into trading, not just trading but into self-development, because I'm going to be talking about a lot of self-development topics and I'm going to be bringing amazing content your way, so you don't want to miss that. So without further ado, let's get into the business of today. Alright guys, so the first trade is on EURUSD. March 24th was when I took this trade. This is from my trade journal, so I'm going to backtest from March 24th till the present date, right? So this trade was on EURUSD. And why did I take this setup? So we're starting from the daily time frame because you always have to do your top-down analysis. You start from the higher time frame till your entry time frame because you need to know what price is doing on the higher time frame. On the lower time frame, you have a lot of noise. You can see an uptrend, a downtrend, a raging market on the lower time frame. But if you go to the higher time frame, you might just see a clear uptrend, a move to the upside, so you know what price is doing in retrospect. So let's get right into it. So on the daily time frame, you can clearly see the market is bearish, right? From here, if I just use the trend line tool, so you can see here down, the market is going down, making a series of what? Lower lows, lower lows, lower lows. But something interesting happened here when price changed sentiment from this point here. So this was kind of like a change of character, right? A market structure shift to the upside, and we have this impulsive move to the upside. We had this impulsive move to the upside, and you know that price doesn't move in a straight line. The market has to retrace, right? So for example, price doesn't just move like this and just keeps going up. It has to retrace, move, retrace, and move. So this is exactly what we're seeing here. After this impulsive move to the upside, price had to retrace. That's why we have this little pullback here. Price is retracing. So why did I take a setup in this kind of market environment? I'm going to be showing you guys the trade and how I got this trade. So on the daily time frame, we know price is bearish, but currently what's price doing? Price made an impulse to the upside and then is currently retracing, taking a pullback. So everything we are trying to do here is get price to this higher time frame supply zone. We are just trying to buy to this higher time frame supply zone. Even though price is bearish on the higher time frame, what's market doing? Is retracing, is buying, right, until we get to this supply zone. So we can take buy trades, right? We can take sell trades as long as we know what the higher time frame is doing. So let's go to the 4-hour time frame. 4-hour time frame. Yeah, so remember, price is pulling back to where? Is either there is a demand zone, price is pulling back so it can get momentum to continue the buys to the upside to mitigate our higher time frame supply zone. You guys remember that's the zone we are looking at. So I'll just change this. Yeah, so where is price pulling back to? We have the demand zone here. Price can possibly pull back into. So this is, you can look at this. So now price is pulling back. What can we do as scalpers, as day traders? You can take advantage of the pullback, advantage of the sales, and that's exactly what I did. So I saw that price was pulling back, and then I started looking for my sell setups. I'm like, okay, where can I sell the market to? Like you can even see there's another zone here. I don't know why this is purple. Yeah, there's another zone here that price can mitigate, another demand zone. We have another demand zone here. So there are pretty much a lot of zones price can mitigate. So I was just looking for sales, supply zones, taking the price lower until we get here, guys. So this is a temporary sell. I'm not looking to sell long term until we either get here, move to the upside, or like come here and then move to the upside. So I wasn't looking to take or hold the sales for a very long period of time. Then I went to the 30 minutes time frame to look for zones, if I could see any supply zones that could help me sell price to those demand zones before we look for buys to the upside. And then I saw this really nice trade setup, and this is where everything came together. So you guys can see here what the price do. Price broke structure to the downside. We'll just label this BOS. So yeah, price broke structure to the downside. Yeah, so this is our breakup structure, and yeah, sweet. So price broke structure to the downside, and then what did he do? He swept all of this liquidity sitting right here. So we have all of this liquidity sweep, right? So we're just going to label this liquidity. So this is our liquidity, right? And then what the price even like kind of took out this high by a weak rejection. This is also a liquidity sweep. So these are a lot of reasons for me to take this trade already, because my confluences are being met, right? So we have a break of structure, we have a liquidity sweep, another liquidity sweep, right? And then what's price currently doing? Price is retracing. So retracing to this other block. If I go to the 15 minutes, I'm sure it will be, yes, sweet. So price is currently retracing to where this other block. So guys, can you see how beautiful this setup looks? Everything is, met. Our confluences for taking a trade, the break of structure, liquidity sweep, not just one liquidity sweep, we had another liquidity sweep. And what's price currently doing is retracing. And you can also see there is an inducement here. So this is engineered liquidity. So this trade is pretty much an A+ setup. This is what I call an A+ setup. So price is already retracing, and when I saw this retracement, I already set my limit order here around this point. Yeah, so that was my entry, and my take profit was like at the most recent low, giving me like a 1 to 3 weeks to reward. And yeah, so let's play this trade and see how it played out. So the price was retracing, engineered another liquidity below price inducement. So this is another inducement zone, and yeah, so this is another inducement zone. Let me just take this forward. Yeah, so let's replay price. So boom guys, we got a mitigation, and I was in this trade, and look at this really nice drop already. Let's just see how it played out. Price almost stopped you out, guys. This is the reality of trading. Like, I was in this trade while I was in profit, and then I went to do something, I came back and I saw that price almost stopped me out. So that's how crazy trading is, guys. And I think the set and forget strategy has to be the best thing. Just set your trade and forget it. Go and do something else with your day. Don't always be looking at the charts, because you're going to get emotional to try to do something to like circumvent the trade. So can you see again, guys, price almost came to my stop loss, and we had this massive drop. So let's just watch it. Boom, guys. So it was a fairly straightforward trade. Everything was so easy. Not easy per se, but like I had all my confluences met. So that was the reason why I was confident, even when we had all of these fluctuations, price going almost to my stop loss and coming back. So you guys can see how fairly straightforward this trade was. We had a break of structure, liquidity sweep again, and price was selling to where to fill in any form of imbalances, fair value gaps, and mitigate any demand zones there to take price higher. So this was a simple trade I took, and yeah, pretty much it. So I hope you guys got something from this trade. So let's go on to the next trade from my trades journal, which is on GBP USD. So GBP USD, let's go. So the next trade was on Euro USD, actually not GBP USD. So still following the same price action. Price is in a downtrend. We are still looking to sell from this daily supply zone here, and we have this supply zone here, which is kind of an inducement, but it can hold for a short while before price eventually invalidates it. So that's why I'm marking this as liquidity, but we still had the reaction. We traded off this reaction, even though we are looking at this as a liquidity zone in the nearest future. So yeah, so let's go to the 4-hour time frame, and let me show you guys the next trade I took and why I took this trade. So if you guys can see, I think on the 1-hour time frame, yeah, price reacted off a fair value gap. I personally don't trade off fair value gap, so it's not it's not my entry criteria, although I have to see it as a confluence before I take a trade, but I don't trade off fair value gaps. But we can just mark this out because price significantly reacted from it. So price reacted from this fair value gap we have here, and on the 1-hour time frame, so I knew that we would see some temporary drops, even if it's to this demand zone here or probably down here. I knew we would have some temporary drops so that we could continue taking price up to the upside to mitigate our daily supply zone, right? So I then went to the lower time frame, like the 15 minutes after I saw this drop. So guys, you already know the drill, you know how I trade. So I'm just going to make it so easy for you. If you don't know how to really trade SMC, I'm going to be explaining why, because from my other videos, I think I was teaching, like I was explaining to people who already know how to trade SMC. So in this video, I'm going to speak like you don't know how to trade SMC. I'm going to tell you why my stop loss was at that top, at why my TP was where it was, why I marked out my zones like that, on and on. So yeah, we had a reaction from this fair value gap. We had a drop. So I'm going to go to the 5 minutes, I think, or so the 4 minutes looks good. So yeah, after we had this drop, what do we have here, guys? This was our last break of structure, right? Remember, in my first video when I was teaching you guys how to trade SMC, I've said the two most important areas when you're trading SMC after you have gotten a mitigation on your higher time frame zone is the last high price formed before mitigating that zone and the last low price formed after mitigating that zone. So what do we have here? This was the last high price formed before mitigating our fair value gap zone here, and then this was the last low, giving us a change of character, right? A trend change, a market structure shift, whatever you want to call it, is all the same. So yeah, after price broke this low, I knew that this was going to be something that might hold, because in trading, guys, nothing is 100%. I can have all my confluences met, my break of structure, my other blocks, my liquidity shape, my change of character, and price will still go against me. It's a game of probabilities, not certainties, right? So after I had this trend change with a body break and close, a candle break and close here, I knew that this supply zone could hold, right? And it looked valid from my point of view. So I saw this zone here and I marked it out because this was the other block here, the last buy candle before the massive sells to the downside, right? So this was where I marked out as my other block zone. So let's play price. Yeah, the price was retracing, forming liquidity here. So we have liquidity in form of equal highs or like a trend line liquidity, but yeah, it still serves. Let's just call this an equal high liquidity. Yeah, so, and when I saw this, I already set my limit orders around here. So why I'm putting my stop loss is this is the order block, this is the high of the order block. I'm not putting my stop loss here because I want to give my setup breathing room, I want to give it buffer. So I put my stop loss above this high. So I know that even if price retraces here and wants to tap the tip of this other block, I'm not going to get stopped out and see price go back in my direction, because that's very frustrating. So I put my stop loss above this high here, and my take profit was at the most can be at this most recent low, but I decided to put it here at this fair value gap because price can, there is also a demand zone here on the 1 hour time frame. So my stop loss was above the other block, my TP was at this fair value gap, giving me like a 1-to-4 risk to reward ratio. So let's repeat price and see how this trade so price was retracing, boom. Guys, there you have it. I got freaking stopped out by news. I think there was a high impact news that happened, and I forgot to delete my limit orders on this trade before the news happened. I don't think I was active on the chart. So when I remember that there was news, I then came back to the chart and I saw that, yeah, I was stopped out. And yeah, this is just the reality of trading, guys. Everything was met, break of structure, change of character, liquidity sweep, and what happened? Price still stopped me out, because that's what happens, guys. And that's why you need to always predefine your risk on every trade. I wasn't freaking out on this trade because I knew how much I wanted to risk on this particular trade. I was not risking too much. I was not risking money I couldn't afford to lose, and that's why I kept calm. And also because I trust my edge, I trust my strategy, I have data for it. I know that this is just one of those trades, and every loss brings you closer to evening trade. So guys, this was it for EURUSD. It was a loss on this trade. Yeah, so let's go to the next trade. So you can just see how real this is, man. Like, it can't be more. Let's just go on to the next trade, right? So the next trade was on EURUSD as well. Yeah, guys, so the next trade was on EURUSD still, the 4th of March. And if you guys remember the first trade we just broke down, can you see this zone I was talking about? Now, this was exactly what I said. So I said that this zone might hold, but for a short while, because remember, price is retracing impulsively to the upside after we had this move. So we had a little drop, the reaction. We took 2 trades from this, nice trades, 1 win, 1 loss. And then what happened? Price mitigated this our daily supply zone that we have been, monitoring. So guys, can you see how beautiful SMC is? So now we had a mitigation of this daily supply zone we have been waiting for. So what does that tell us? We can now start looking for ourselves, and we can expect more drops from the market. So this is the higher time frame supply zone. I'm just going to mark this out so we can background. Right, so this is our higher time frame supply zone. So this is going to be higher time frame supply. So this is our higher time frame supply, right? And price has mitigated it. And what happened, guys? We have this drop. Let's go to the 30 minutes. So yeah, after price mitigated, we had this drop, and then let's just see what price did after we had the drop. Yep, so we had this drop, and let's just play price to see what price action was like. So price kept on, trading, dropped. We had a mitigation of this other block, but I didn't take this because my confluences weren't met. First of all, there is no clear break of structure. We can argue this is a break of structure here, but any trade that is degenerate and doesn't have all of my confluences, I don't take it. Hence why I didn't take this trade. And then price dropped. We had this break of structure after the first break of structure. So this is our first valid change of character. Price has taken out this low, right? So we have a break of structure here. We're going to leave out this big move S. So we have our first break of structure. Yeah, sweet. And then what was price doing? Price is retracing to where, right? So that's what you need to, that's the next thing we need to ask ourselves. Where is price retracing to? But one thing we're clear about is that we are coming from a daily supply zone. So we are clear on taking ourselves, and we can take ourselves with confidence because we just had a mitigation of that supply zone. And then if you guys can see, this was the last buy candle before the massive move to the downside. So this is our valid order block, right? So we have marked our order block. This is the valid order block. Why is it a valid order block? Because this was the last buy candle before the massive move to the downside. Price broke this structure with a candle body break and close. And then what else do we have? We have this imbalance here. Can you see all of these impulsive candles telling you that the big banks were involved in this price action? So let's just replay price and see what happened. So price was retracing, and can you see this liquidity zone here? This single high, this can be valid liquidity or even a trend line liquidity, but let's just make it a single high liquidity. And yeah, so this is our liquidity zone. And when I saw the liquidity already being engineered, I knew that it was time to set my limit order. So I already set my limit order here, short position. So remember, my stop loss is always above my order block, and then I give it a lot of some room, right, so that I'm not stopped out unnecessarily, and then I'll have price go in my direction. So my take profit was at the most recent low, right? Your take profit should be at either fair value gaps, right, demand zones, supply zones, depending on if you're buying or selling. And then you can also place your take profit at liquidity zones as well. So recent lows, demand or supply zones, fair value gaps, and liquidity. So here, what do we have? Recent low, right? This was the most recent low that price had created. So this was where I set my take profit, and then my stop loss was above the order block. And then we had this liquidity engineered, right? And then let's just play price to see what happened. So guys, I was mitigated in when price had taken out that liquidity. I think on the 15 minutes it should be, yeah, on the 15 minutes it's a bit more clear for you guys to see. So this was the liquidity, price swept and then mitigated me in this trade, and we had this nice drop. Yeah, so when I saw this impulsive candle to the downside, I just knew that this could be a really nice trade. And let's just replay price to see how it went. So retracing, and boom, my TP got hit, guys. So it was a fairly straightforward trade. I'm just going to take it again from the daily time frame so you guys can see. Remember, we had a mitigation of the daily supply zone 1, Number two is we went down to the 1 hour time frame to look for setups. We saw this other block, but we didn't take it because they did not have all our confluences. And then we saw the first valid break of structure I marked out here. And then the next thing I did was to go to the lower time frame. That's multi-time frame analysis, guys. You have to switch time frames to see what price is telling you. It's like a story. You need to piece it together like a puzzle, right? So after this break of structure, price left a clear fair value gap. So I knew that something interesting would happen around this place. So because we have all of these imbalance, I knew that an order block should be somewhere, and we spotted the last buy candle before the massive sell. We saw liquidity being engineered here, right? Equal highs, and then what happened? Price swept the liquidity, mitigated us, and then hit our take profit. So very, very simple trade. This was a 1 to 4 risk reward for me. Really nice trade. I took it on my evaluation account. So yeah. Alright guys, so the next trade was on AUDUSD last week Wednesday on the 9th of April, and yeah, I'm sure you guys can already tell that this is a bearish market because price has been making a series of lower lows and lower highs. Yeah, lower lows and lower highs since February 19th, 2021. AUDUSD has been bearish and selling. So now we know that we are in a downtrend. We want to be looking for our supply and demand zone. So if you guys can see on the daily time frame, we have a demand zone. I think it's clearer on TradingView. I'm using a different software to replay and backtest. So we have two demand zones. One is here and then one is here. So price had invalidated the first one. Let me just show you guys here. So price had mitigated and then is about to invalidate this one. So this zone, we are not looking to trade off this zone again. So the next zone we are looking out for is this demand zone on the daily time frame. This particular demand zone here, for price to mitigate, and then we can expect to have a change of character, giving us a shift in the market trend from bullish to bearish. So let's get started. So I'm going to go to the 4 hour time frame. Remember guys, top down analysis always starts from the higher time frame. Higher time frame is king. You have to start from your higher time frame. It could be the daily, it could be the 4 hour time frame, whatever suits your trading style. So remember guys, this demand zone has been mitigated, price reacted off it a bit, went this high, and then it's coming back all the way down to invalidate this zone. So we are not looking to trade off that demand zone. Instead, what we can be looking for right now is to sell this market to our higher time frame demand. So let me just mark this out so you all can see. So this is our higher time frame demand zone. Higher time frame demand. Yeah, so this is our higher time frame demand zone that we are looking for sales to. So I went to the 1 hour time frame when I was taking this trade, about to take this trade. So on the 1 hour time frame, I saw a zone I could trade off, but I didn't take it because it was too large. The stop loss was large as well, and the risk reward wasn't just it for me, so I just didn't take that trade. So yeah, this was the first setup. I didn't take this setup, and then I was just waiting and monitoring price to see if I would get any sales, any supply zones to be able to, trade the market into this higher time frame demand that we have marked out here. Yeah, so let's replay price. So see what price just did. Price broke this structure, right? So price just broke this structure, the new structure, giving us a new break of structure. Let's mark this out as VOS, and let's head over to the 1 hour time frame. So after price broke this structure and then a retracement started happening, I was thinking, where is this retracement going to, right? Is there any zone I could look to sell off? And I saw, I'm sure you guys have already spotted this zone. I saw this nice order block here, this nice supply zone. Why is this a valid order block? Number one, we had a break of structure to the downside. Price broke this structure. What did we have next? We have all of this imbalance, right? Fair value gaps, telling you that the big banks were involved in this price action. And we have this tiny candle here, which is our order block, which is the last buy candle before the massive sell to the downside. So let's move on with the trade. And the next thing we had here, we had a liquidity sweep. So all of this here is liquidity engineered and liquidity swept. So yeah, this was when I knew that this trade was going to be a nice trade, right? So I then marked this out as well as the first break of structure. So this is not really significant, but yeah. So let's replay price. Although one thing I didn't really like in this trade was this massive weak rejection. I'm just going to mark this out so you guys can see this weak rejection that we have here. I wasn't really comfortable about this, but the fact that I had other of my confluences met, I just said, let me just risk on this trade, risk little on this trade. But I had other of my confluences met. I just didn't like this reprojection here. But nevertheless, let's keep on playing price. So price was pretty much doing its thing, and boom, we had this inducement around price. And then I started setting my limit orders because I knew that, yeah, this trade was going to get triggered anytime soon. So my stop loss was above the high, guys. Remember, stop loss above the high of your order block, and then my TP was at this recent low that price had created here. Remember, I said your stop loss can be, your take profit rather, can be at supply and demand zones, order blocks, which is supply and demand zones, fair value gaps, liquidity, or the most recent high or the most recent low. So I already set my limit order, and let's replay price. Yeah, so price mitigated this trade. I was in this trade already after this liquidity was swept, and very nice drop, guys. Very nice drop, like a sniper entry. So let's replay price and to see how this trade played out. The price kept on dropping, and yeah, I think 1 to 2, yeah, 1 to 2 risk reward. So I had broken even at a 1 to 2 RR. So once price gives me 1 to 2, I'm at break even. So price 1 to 2, and let's see how it went. So it stops me out at break even. So this was a break even trade on Wednesday last week on AUDUSD, guys. So that's it for today, guys. I hope you learned something from this video. If you have any questions, I will be leaving my WhatsApp link in the description below, so you can talk to me directly, and also let me know your thoughts in the comment section. I would love to hear from you guys. I hope you learned something and you enjoyed today's video. Thank you so much for tuning in. Stay tuned for the next video. See you guys later.